After all that turmoil, it took about a month for Symantec stock to bottom. But ever since it's found its footing in early June, it's been marching higher until last week when it catapulted in the stratosphere. And that's when Bloomberg broke the news that Broadcom's in advanced talk to acquire Symantec. Of course, as I mentioned, this is not a done deal. Apparently, the two companies are still haggling over price. David Faber, CNBC's own M&A and maven and my squawk on the street co-host, says he's hearing that they could pay more than $25 a share, but less than $30. And if Broadcom can't make it work, well, they've got a backup plan to buy another software company, and that's the privately held TIPCO, which, by the way, used to be a regular on the show, too. Then over the weekend, Bloomberg broke another story. They said that Broadcom's getting its financing ducks in a row, and they note that Symantec's former CEO, Greg Clark, not to be confused with Clark Gregg, is working with a private equity firm to set up a rival bid. If Rick Hill can set off a bidding war, that would be the cherry on top. Even if he only makes the Broadcom deal happen, I think that's enough to guarantee him a position in the Mad Money Hall of Fame, like part 2. Let me make one thing crystal clear. At this point, it's too late to buy Symantec. Once you know a deal is in the works, that's when the arbitrators step in, and so therefore the easy money's already been made. So even though it might go out, I think at 28, if it goes out, I'm not getting behind it here. It's moved too much. However, there is definitely a case for owning the potential acquirer, Broadcom, symbol AVGO. Now, this is an odd deal for a gigantic semi company. It would be their second software purchase in a row, following last year's acquisition of CA Technologies, which worked out incredibly well. Back then, that transaction did strike many investors as odd, and Broadcom stock got hammered. But the stock only rocketed higher from last November when the deal closed at the beginning of May, when the semi cohort peaked as the trade tensions with China heated up. Now that our government seems to be maybe ratcheting down those tensions at least somewhat, we can focus on the fundamentals again when it comes to the semis. And at Broadcom, the fundamentals are real good. CEO Hock Tan is a brilliant deal maker. We know that the CA takeover is doing better than expected, in part because CA shared a ton of large enterprise customers with Broadcom. Now Tan is trying to buy Symantec because he wants to offer his clients bundled solutions rather than just hardware. Basically, he's trying to get a larger piece of the information technology spending pie. Symantec gives them a truly excellent security offering that they can sell alongside their chips, and I think it could be a potent combination. And while Symantec still needs to be turned around, and I unfortunately think a lot of people have to be let go, Tan is one of the few executives out there who can pull that off, as well as Rick Hill. Well, he's done it many times. Bottom line, when you find a bankable chief executive who always seems to create value for the shareholders, stick with them. 2 months ago, Symantec looked like a total mess, but they made Rick Hill interim CEO, and he's perhaps found a way to strike a deal with Broadcom for his company, and in record time. And hey, if you want more of that Rick Hill magic, you should know that he's still the chairman of Marvell Technologies. We own that one from my Charitable Trust, which you can follow along by joining the ActionAlertsPlus.com club. But more importantly, you need to view this as a learning opportunity. When a CEO has earned the benefit of the doubt, please give it to them.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.